Hi, my name is Steve Houston. Again, I want to say welcome to my YouTube channel where all of us come together. We talk about the facts. We present the documentation. We allow you to decide what's best for you in the mortgage section, final expense, really the whole financial services industry. We talk about the IMOs. We talk about the comp plans. We talk about the products. And through that, hopefully you can make a better decision about where you want to hang your out, so to speak. So again, I appreciate you being here, being a part of the channel. I so much appreciate the 20, 30, or 40 people per week that I end up getting a chance to talk to, exchange texts with, emails. That's why I started this channel. It wasn't just about us making a move from a different IMO. Look, I talk to a lot of people each and every week that really have a desire, have a big heart, a huge reason for needing to survive and to excel and do well in this industry, not just buy leads and end up doing nothing and wasting a bunch of money. So we're pursuing some other avenues off of the YouTube channel that we are considering. It takes a lot of money to do this. We're trying to buy better equipment, better cameras, better audio. As I look over to my monitor here and see how that looks, better audio equipment, and just kind of up our game here a little bit so that this is kind of a testing ground so that maybe we can do some advanced stuff later, whether or not we work together. I think that's really what I'm trying to say is that if it's a fit for us to work together, fantastic, and you're a fit for what we're doing, that's great. But I don't want that to be a requirement. I want to be able to give to everybody. I want to be able to pay it forward what this industry has done for us, for myself, and for Angela, and for many of our agents. To those of you who may not have the option of making a move and have to kind of survive where you're at, but have no training and have no real support, and that happens a lot in this industry. And unfortunately, I don't buy into that philosophy of some will, some won't, so what. I want and I believe that majority of people can survive at a minimum on a part-time basis, making $500 to $1,000 a week in this great industry, and I want to be part of that. So we are looking at the Patreon option. Patreon, I'm not a Patreon expert, but it allows us to put up some videos over there, some really advanced trainings. Our desire and vision for that is to really get into some phone scripts, live dial sessions, so you can really see how to handle the leads and how to handle the objections that are on the phone, and kind of improve your skill set. Look, if you can get really good at booking appointments, getting some leads, booking appointments, and doing a case strategy and doing an in-home presentation and writing some apps, your income is you really can be as high as you want it to be by just simply scaling the number of people you're contacting through the course of the week. That's how it should work. But you have to build some basic skill sets in order to make that happen for you. And I know you can do that. Like I said, some will be $500,000, $600,000 a year earners, and some people will be $20,000 and $30,000 earners, and nobody any more special than anybody else. It just comes down to desire and how much you really want to earn in this business. Maybe it's a part-time business for you. That's fine. But again, part-time should still be making you an income that supports your business and allows you to participate in a leads-based sales opportunity. So I said all that to say this: if it's something that you are interested in and you're willing to participate in, put that in the comments. We haven't made a decision yet, but we know we're going to spend several $1,000s on some better equipment, and maybe even a studio where we maybe do live webinars, live dial sessions, have Angela do a live case strategy with you, all those kind of things that really will turn into cash for you. And I think over there you can donate as little as $1 for each video that comes out, right? If it's no value, you're not obligated. So put that in the comments. Help us make our decision. So this week I want to talk about an objection that many of you get. One of the objections that we run into frequently is, I have no life insurance on my job, or I don't need this, or I already have a lot of life insurance, right? So in that case, what you do is agree with a client, right? But I think I can help you with this. It's something that I learned from my mentor years ago that really makes a big difference. And so here's kind of how it goes. If I was sitting in the home, for the purpose of the video, I'm sitting with Jack and Jill in the home, and I get this objection that Jack has coverage at his work. And I'll go, well, Jack, you may have all the life insurance you need. Has anybody ever taken the time to explain to you how much life insurance you actually need? And before they go to answer, you start into this presentation or into this scenario, right? And for those of you who are looking at this video for the first time, I've never had a single person tell me after seeing this presentation that they had enough coverage. So hopefully I can say it and articulate it in a way where you can take some notes and put this into your presentation. So here it goes. Okay, so there are 4 reasons why people buy insurance, right? Buying life insurance. The first one is burial. And we said already that you've got some insurance, so this one's already taken care of, right? The second one is taxes, right? So unless your estate is worth over $1 million, we really don't need to worry about that one either. So we're going to eliminate the burial and the taxes. So let's take a look at the income replacement scenario. Now, so for the purpose of this training video, we're going to pretend that Jack has $300,000 worth of life insurance on the job. You probably run into situations where they have a lot less, or maybe some will have more. Generally speaking, not more. But let's assume that we're going to deal with a $300,000 of life insurance on the job. Now, so going back to my presentation, Jill, if Jack doesn't come home one day because of a car wreck or a heart attack, you will get a check for $300,000. Now remember, if he doesn't come home because of a car wreck or a heart attack, neither does his paycheck, right? So this money has to be put aside to replace his paycheck. So now you can take that money and you can put it in the CDs. Well, you're going to get about 2.5% less taxes. That's not going to be enough money. You could take $300,000 and put it in mutual funds, but you might wake up one day and that ends up being $200,000, right? That's the risk involved with mutual funds. Now, as a widow with children or grandchildren, that's not a way to live. So what do you do and where do you go? Well, the first thing is you find yourself a life insurance agent that offers annuities, and don't go to New York Life or Prudential or MetLife. Not that they're not good companies, because they are. But their agents are captive, meaning they can't shop around for the best products for you. Find yourself an independent agent that offers annuities. Now, for the last 30 years, the rate of return on annuities has been about 6%, right? A year. So, Jill, that's going to... let's again, going back to saying, assuming you have $300,000 worth of life insurance at Jack's job, that's going to yield about, let's say, $300,000. And I would write this out on a piece of paper with Jack and Jill, right? At 6% would be about $18,000 worth of annual income. So, Jill, you're going to have to live off that $18,000 a year for the rest of your life, right? So, but here we got a problem, right? And that problem is we've got a mortgage over here that we still have to pay, right? And it's going to take almost all of this $18,000 to make your mortgage payment, right? Now, understand, I'm here for one reason only, and that is that we get this debt here as close to zero as possible. So, Jill, it's going to take, again, all this money to make your mortgage payment, right? So what you need to do sometime when I'm out here is sit down and ask yourself, okay, Steve took care of my mortgage with a mortgage protection policy, right? How much more money do I need to live the rest of my life? Because of the mortgage taken care of and this $18,000, you're not going to live like a queen, but at least you got a fighting chance. Steve took care of the mortgage, and I've got this $18,000 coming off of Jack's life policy. You can figure out exactly how much more life insurance you need to replace that income that should be coming off of that annuity, right? Now, the formula is this. For every $100,000 of life insurance, right, you're going to generate about $6,000 worth of annual income, right? Or about $500 a month. Now, let's assume, Jill, that you need to aside from the $18,000 that's going to service a debt over here for your mortgage protection, let's assume you decide you need $2,000 a month in additional income in order to survive, right? Well, if for every $100,000 worth of insurance that you have, life insurance, it generates $500 a week, you're going to need 4 times this $100,000, which means you need a $400,000 policy in addition to the life policy that you have. So keep in mind, once we've dealt with the mortgage, we still have to start working on the income replacement. Now, if you're dealing with a client that may be more of a higher end client, instead of using the $300,000, you may have to use $500,000, right? $600,000, maybe $500,000, whatever it is, and then use 6%, which is about $30,000 a year versus $18,000, right? It all still applies to what Jill needs to to live off of, right? So hopefully that helps, right? It goes back to, again, what, this whole idea, because again, many people get stumbled with, I have coverage at my job. Well, $300,000 policy, to be honest with you, is pretty high for a job policy. And keep in mind, they don't own that policy, right? The company they work for owns that policy. So I automatically write this one off in my conversation. But if that's not good enough, you may have to demonstrate why they need more than just a job policy, right? The first way to handle that is, Jack and Jill, you don't own that policy. Let's get you a policy that you do own, right? The second thing is, how much life insurance do you really need? And come to find out, this $300,000, and I've been in many homes where they're talking about $50,000 or $100,000 worth of job policy. That's going to, again, that comes down to, imagine at $100,000 at 6%, we're looking at about $6,000 a year, right? It's nothing. But they hear that $100,000, they think that's, that they're going to get that $100,000 immediately in way of a check, and they're going to go through it, right? But they invest it into an annuity rather than spend it, because they spend that $100,000, it's gone, they're done. So the smarter way is to take the proceeds, the insurance proceeds, and put them into an annuity, and then live off the money that the annuity is producing, right? So going back to $300,000, $18,000 is nothing. So $50,000 and $100,000 is certainly less than nothing, right? So if you go through this scenario with them, I think it will help you in the home, right? So again, if they can live off $2,000 a month, given the fact that each $100,000 is going to generate $500 a month, they need 4 times that to get to the $2,000, investing that $400,000 policy into an annuity that's producing about 6% return annually per year, right? If they need $4,000, that means they need $800,000 worth of life insurance. I think that will help you. At least it'll clear up in their mind that they're clearly uninsured, and that's really the start and the basis for this whole objection, is that you need to set the example that they are underinsured and she, Jill, is at risk. Hopefully that helps you. Enjoyed being with you, and again, leave some comments below. Let us know about the Patreon opportunity. If it's a thumbs up or a thumbs down, we're good either way. We're just trying to create value. I mean, again, like I said, we have visions of doing really interacting with you on conference calls, webinars, and that type of thing. For those of you who think that we can help you with any kind of training whatsoever, we'd love to hear from you. Other than that, mash the bell down below. That means you're going to get instant notifications on videos like this that go live stream, and then hit the subscribe button. We do appreciate being a part of your life and being a part of your success in what I believe is an incredible journey in this industry, mortgage and final expense. And listen, I believe, again, I said in other videos that in 30 years, I've never seen it quite like it is right now. The momentum is here. Over the next 5 to 10 years, you can set yourself up for a lifetime of residual income. I look forward to talking to you soon. Have a great week, and look forward to seeing you on the next video. Bye-bye now.